Howdy, who all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. It's Monday. The markets are back open. I love Mondays, right? Except today, bond market's closed. That's all right. Stock market running regular hours. Bond market's closed for Columbus Day. So what's going on? Well, the Dow's down about 40, NASDAQ down about 50. We had the war break out over the weekend, sending the market a little bit lower, but we're already rebounding back upward, right? Now the price of oil has shot up, right? Somebody wants the price of oil to go up high, so a war broke out. Okay, seems to be working, seems to be sending oil up higher. But where's the market headed from here? Well, we had a pretty big rally on Friday, and we had a little pullback today, but I do think this market is making a bottom, a short-term bottom, and we're going to get a bounce from here. Now, mark my words, we will come back down below that 200-day moving average, but it's going to take some time. We're going to get a bounce from here, and I think we're going to get a pretty good bounce up to probably 4,500. Maybe we even go back, retest the July high before we come down. That would be interesting. That's quite a move. That's a, 200-300 point move on the S&P. That's considerable, but I think we're going to get a bounce. I do. That's my take. Maybe we just crash right through that 200-day, and eventually we will. I just don't think it's time for that yet. There's too many signals that are signaling positive move in the stock market coming. One of them would be that everybody's buying put options. When everybody's buying one thing, do the opposite. The markets rarely reward the crowd. The crowd is betting now for the market to go down. Now it's probably going to get a bounce higher. Just my take. Let's get over to the real estate market. All right. So we had the Bank of America. We talked about a little bit. They say there's not going to be a housing crash, but they say there's going to be turbulence in the housing market. But their reason that there's not going to be a housing crash is because the millennials have put a solid floor under the housing market. They're going to come in and buy all these houses up here at the price that Billy Bob sold at. Really? You see, I did not think that the millennials could afford to buy all these houses. Not at the prices they're at now. It's never been more unaffordable. We have an affordability problem. Yes, the millennials would like to buy all the houses, but the millennials cannot afford to buy the houses at these prices. So I believe that the prices will revert back to the mean, which is down about 40% from here. We'll see how that works out. Now, the Redfin CEO, Glenn Kelman, he was out again. He was talking about the American dream is in trouble. The American dream's in trouble. You know what, Glenn? Your stock is in trouble. That's what's in trouble. You see his stock, Redfin, trading about $18 back just in July. Down here at $6, lost 2/3 of its value just in a couple months. I'd say he should be worrying about his stock and not about the American dream. But he says the reason the American dream's in trouble is that 1 out of every 5 millennials they think they're never going to buy a house. Now, that means that 80% of them think they're going to buy a house. That sounds about normal to me, but that's just my take. His take is completely different. But I think the whole housing market is in a lot of trouble, going to come down about 40%, right? Now, what's getting blamed for this downturn? The reason we're coming down? Well, they're blaming the high interest rates. We're up almost 8%. We're above 7.5%. Headed to 8, probably headed to 9. I'm predicting 10%. I think we'll see 10% mortgage rates next year. A lot of people disagree with that, but I was saying that when everybody else was getting 2.8. I was saying we're going to 10. People thought I was crazy back then. Now it doesn't seem so crazy when we're at 8. Maybe we could get to 10. But that's not the reason that this market has come to a standstill. That's not the reason. That's what's getting the blame. The high rates is getting the blame. The real blame should be on the low rates. We held the rates at 0%. The Fed had the rates at 0% for 14 years. What did this do? Cause prices to double and triple in the housing market. created the biggest bubble in the history of the world. We've never been so unaffordable. We've never been so expensive. But a lot of the moon boys think we're going to keep going up. We're going to keep going up. Now, I don't see it that way. I really don't. You see, I see 10% mortgage rates coming. And I think that's going to send the market lower. It's going to send the market where some of those millennials can start to think about buying because those houses will become more affordable if we stop printing the money and trying to inflate every bubble out there. Look, there's a stock bubble, right? There's a housing bubble, everything bubble, right? And it's all because we print this money. None of these markets are real. They're all artificial stimulation to grow the bubbles bigger. Everybody wants things to go up. People hate when things go down. People hate when we have a recession. I got news for you. We got a recession coming. It's going to be a bad one. We haven't had one really in about 12 years, right? 12, 14 years ago was the last recession. See, a recession clears things out, gets rid of the bad investments. Recessions are actually good. Now, you don't want to go into a depression. They're probably putting us in that direction by holding those rates at zero for so long, sends all the bubbles way up. They have to pop. And yeah, that could result in a depression. But that's over time, right? So, okay, so what's going on now is to who's selling, who's been buying, right? Okay, a lot of people talk about how the corporations, they're all responsible for this. No, once again, Federal Reserve responsible for this. They gave the corporations all this money. Take all the money you want. 0%. Well, they couldn't get a yield anywhere. So what they did is they came into the housing market. They could get 4 or 5% yield, right? So that's what the corporations, they were responsible for about 30% of the purchases in the last couple of years. Well, you know what's happened? They were buying 30% of the purchases. Now they're a net seller. They're running for the hills. They see the writing on the wall. Now, why are they running for the hills? They're running for the hills because they can get better than 4% just putting their money in the bank, just putting it into the bond market. They can get 5% just sitting on their butt doing nothing. Why the heck would they want rental properties? Look, I've had rental properties before. I used to manage a lot of properties. I used to have a lot of rental properties, and it's not a fun game. Now, this Airbnb thing that's going on, I always found it funny. You know, you turn in the housing market into the hotel market. Those two used to be separate markets, but we want to turn all our houses into hotels. Well, maybe that's the way to go, but it's backfiring on a lot of people. A lot of people have 5, 6, 7, 8 properties because they took these courses that, you know, how to run an Airbnb business. Now, what they did is, you see, an Airbnb business, you can get higher rents because you can rent out by the night, just like the hotel does. You can bring the person in and out, in and out. Look, at tenants, or management is a headache in itself. And there's a lot of problems when you bring people in on a nightly basis. There's a lot of problems. Let me tell you about one of them down here in Los Angeles. I found this one amusing. It's called The Tenant from Hell, right? All right, so this is a professional renter, comes and rents a property off Airbnb. They rent it from this guy named Joe. Her name is Elizabeth, right? Elizabeth rents this property from Joe. It's actually a little a makeshift in-law quarters, let's call it, on his property. So she now becomes Joe's tenant, right? Well, okay, now she's a professional renter. Okay, so what does Liz do? Well, Liz contacts the Department of Building Safety. It's weird, right? A tenant calls up the Department of Building Safety and would like them to come out and inspect the property that she's renting for Joe on a nightly basis. Well, they got nothing else to do apparently at the Department of Building Safety, so they come out and they inspect the property. Well, what do they find? They find that there's some problems. It's not permitted, number one. It has an illegal shower added in it, number two. So they found some safety violations, and so they wrote Joe up saying, hey, you got safety violations. You can't rent this property out. So what does Liz do? Well, she stays in the property. But does she continue to pay Joe? No, she doesn't pay Joe. She was paying Joe roughly $100 a night, right? Well, she's been there for 541 days so far. Now, Joe's tried to evict her. He's tried to do everything, but she's got well, she's got the government on her side. This is in California. In California, we got some very strange laws, right? So anyway, there's lack of approval for occupancy. So when Joe tries to evict Elizabeth, he gets thrown out of the court system. See, this is a professional renter. She knows what she's doing. She's got her lawyer. Joe's got his lawyer. Joe's got to pay her lawyer because he lost. Joe got that thrown out, right? I mean, he can't evict this woman. Right now, she owes Joe $60,000. Joe's out 60 grand plus the cost of his attorneys. Now, how long will this keep going on for in California? I'd say forever. You see, California, they hate the landlords, but this is just one tenant. Think if you had 5 or 6 or even 10 of these properties, would you want to sell some of them? Would you want to put them onto the marketplace? I think you might want to sell some of them. Now, there's a whole new business model out there. What you do, you go rent a house, right? You rent it for a long-term, 6-month, a year rent, right? And when you stop paying the rent, what do you do with the property? Well, you Airbnb it out on a nightly basis. So you collecting all that Airbnb money and you don't own the property and you're not paying rent. Now, back in 2008, what was happening, I had several cases of this where they get a call from the bank. They're renting the property from the landlord, right? And all of a sudden they get a call from a bank. They don't know who the bank is, but the bank now tell them they got to move. Why do I got to move? I'm paying my rent. The bank says, you're paying your rent, right? But the landlord's not paying his mortgage and we foreclosed. We now own the property. We're kicking you out. But the whole time they were paying their rent. This was very common in 2008. Sometimes you can make a deal with the bank to buy the property. You go from being the tenant to the owner because the owner that was in the middle of the bank and the tenant, that owner, he got it foreclosed upon anyway. So he lost the property. Bank owns the property. They don't want it. They make the tenant a good deal. Sometimes it worked out really well. Now, in my career days of managing properties, I had a bad one once. His name was Leon, right? He was a professional renter, man. He bamboozled me. He came in there and he ran the property. And I was greedy back then. I was young, and I was greedy. I always like to get market rents. Maybe I could squeak out a little higher than market rents, but the quality of the tenant was bad, right? And I'd end up with these evictions. Well, Leon, he was professional. He knew exactly what day the sheriff would show up to evict him. He wasn't going to move an hour before the sheriff got there, He's going to wait till the last minute. I was losing all this money. I was stressed because I was leveraged. I had multiple properties. I was leveraged on them all, and I didn't have the income coming in from the rents because Leon was sitting there not paying me. Well, what happened? I ended up paying Leon. I paid him money. Oh, but Leon, he's too lazy to move, so I had to get my buddies to come over with trucks, and we moved Leon while he sat on the couch. Be careful with the TV set, Mike. That's my favorite, I don't want you to scratch anything. Not only did I pay him money to move, I had to pay for his storage unit, and finally Leon got out of my life. Now, if I had a gun, I probably would have shot him, and then I'd been in jail. But anyways, that's my story of Leon. Sometimes you have to pay the people to get them out of your properties. Now, I learned as I got older, my econ teacher, my economics teacher, he told me a system. See, he manages over 50 properties, and he's never had a problem with one of them. You know what he does? He doesn't collect that application. He doesn't care about, well, he gets the name and all that stuff. He doesn't run the credit, though. He never runs the credit. But he doesn't tell him he's not going to run the credit. But I go, well, how do you know if they're good or not if you don't run the credit? You don't get a credit score. What else you got to go on? He goes, this is what I do, Mike. This is what I do. I have him give me 3 names of people that will vouch for him. People that will vouch for him. What I do, I take those 3 names and I call each one up on the phone. And I say, look, I'm renting this property to Brent. Is Brent a good guy? Oh, yeah, Brent's a great guy. Oh, that's great. Good to hear. Good to hear. Now, Brent doesn't pay. You'd be willing to pay for him, wouldn't you? Oh, hell no, Brent's a loser. He doesn't pay his bill. You see that right there? It catches him. But if he's got 3 people, 3 friends that will vouch for him, 3 friends that might pay his rent, then Brent's probably a good guy. Okay, that's technique number 1. Technique number 2, you walk out to their car with them. You look at their car. The way they treat their car is the way they're going to treat your property. But this is what my economics teacher does. Manages 50 properties, never had a late payment, never had an eviction problem, even throughout the pandemic. 50 properties, never a problem. That's the way you do it. So as I got smarter, that's now my way to manage properties. But okay, so these Airbnb people, though, there's been a surge in the searches for sell my Airbnb. A lot of these people, they just want to get out of the Airbnb business. Why? Why? Because they're losing their butt. The bubble has popped, and these sellers are desperate. These sellers are liquidating these properties, right? And there's a lot of Airbnb properties. You can go on Airbnb and look at them all. But the problem is that the rental income from these properties are down about 40 to 50% in many areas. Now, they don't cash flow anymore. And these mortgages, these guys are levered out with 5 or 6 of them. I know how they felt. You don't sleep at night when your income just crashed by 50%. And that's what's happening in the Airbnb business. A lot of them are underwater, right? So anyways, these are short-term rentals, and a lot of places have banned the short-term rentals, that they can only do long-term rentals right now. So the people go, oh, at least I can get some long-term money coming in. So they rent it out on a monthly basis instead of a nightly basis. But the money that comes in is a lot less, and it doesn't cash flow. They're underwater. They're losing money month after month, so they're starting to dump these properties. They're starting to liquidate. They want out of it, just like the regular investors, the BlackRocks, the Blackstones. Innovation Homes just dumped like 2,000 homes onto the marketplace. Why? They're running for cover. They see what's coming. Market's coming down about 40%. I know in your area that could never happen. Your area only goes up, man. That's cool. You probably don't have not one Airbnb unit in your area. I mean, that's really impressive. Anyways, I got on a little roll today. It's Monday. It's Columbus Day. Everybody get out there. Have a great Columbus Day. Hit that subscribe button, because give me the thumbs up. Why not? I want to talk to you again later in the week. We got a lot going on this week. Bye-bye now.